Welcome to Homebuyer Seminar for January 17th, 2026, the first after my birthday. I hope I don't look much older than I did last
When was
time.
your birthday?
A lot of exciting stuff, a lot of changes. My birthday was great. My grandkids took me out to dinner. I have 3 grandsons, and it was just the greatest. It was just the greatest time. And they made me a birthday card, and it was great. Yeah.
That's awesome. Happy birthday.
The show continues. I think I still have something going on Sunday.
Capricorns.
So anyhow,
Woo!
What's that?
I said Capricorns. I'm also January baby.
Yeah, I'm a Capricorn. So, but hey, beginning of the year, a lot of changes, a lot of new programs, things ready to happen. We have Shannon the lender on to kind of give us a highlight. Shannon, what's happening in the lending industry? What's different?
Man, there's so many exciting things for first-time home buyers this year. I mean, any pretty much objection you had of buying this year went away. Interest rates all-time low. So FHA for 740 FICO score today, you're at 5.25. If you have a 740 and you're going conventional, you're at a 5.75. So either way you slice it, you can get a 5%. I mean, hey, who knows? Maybe you can be in the 4s this year. We don't know. But I mean, this is all good news. Interest rates, conforming loan limits. Oh, so you see the chart there? Look at that. We're at an all-time low.
We're all-time low, but we're at a...
Well, yeah, all-time low for...
3-year low.
Yeah, 3-year low. Okay, bro.
Yeah. So, in fact, I'll put exactly...
My mind works in dog years, so...
These are the last 3 years, and it's the lowest it's been in the last 3 years.
Yeah. So again, if your FICO score is excellent, you are in the 5s for sure. Anything over 740, even maybe in the 720s, 700s, you're good to go there. So that's that. Now, also conforming loan limits. So if you are going FHA or conventional, look at that. The high cost. If you're in a high cost area, which if you're in Los Angeles County, you're in a high cost area. Look at that. If you want to buy a single family unit, you're at 1.249, which is great. If you want to buy 2 units,
Loan amount.
Yeah, the loan amounts. So again, that's loan amount. So if your purchase price is a little higher, you're putting down a down payment. So your loan amount has to be at 1.249. So just under 1.25. If you're house hacking, meaning you're buying duplex, triplex, or fourplex. Duplex, you're at 1.599, just under 1.6. Triplex, you're just under 2 million, so 1.933. Fourplex, you're at 2.4. This is crazy. So if you want to buy a fourplex, FHA, conventional, so this is all good news for first-time homebuyers. If you want to go FHA or conventional, and you want to buy a fourplex and it's 1.7 million, you can put down 5% and still get that fourplex. So this is all good news. Also to Calhaffa Dream for All. I just funded a Calhaffa Dream for All a week ago, putting 20%.
Let me interrupt you really quick.
Please.
So the California Dream for All, the loan that you just funded, when did the buyer apply for the loan?
Like 2 years ago, a year and a half, 2 years ago.
Yeah. Their voucher on that first go around that they did when they launched the program?
They did not. I don't know what Calhaffa did. They got a voucher in September, late September. Mm-hmm. Yeah, so, I don't know. Okay.
Right. So it could take some time for the funds to get allocated and dispersed and for a buyer to receive their voucher. So the program's opening up the first quarter of this year. Shannon, I know you're going to go into it more right now, but if you are looking to apply and you may be a good candidate for the program, but you would need to start getting your documents together and applying now in order to have a good opportunity, because there's only a select amount of families that get the voucher. I think it's about 2,000, right? In California.
Yeah. Well, I think from what I heard from someone at Calhaffa that I talked to, they're waiting for the first round of funds to end, which I think that's why my buyer got in, because he was a part of that first round. So they're wanting to see how much of those funds people actually got, to also see how much they're going to allocate now. So yes, the rumors are mid-February. These are the rumors. And in order to do that, it is going to be a lottery system. So instead of first come, first serve, that's not the case anymore, but it is going to be a lottery system. They'll give a time frame of when you can, apply, and the lottery system will begin.
Mm-hmm.
Now, you do have to be a first-time home buyer and a first-generation home buyer, meaning that your parents cannot own a property, or at least one of the applicants, the parents cannot own a property. And you also have to meet the income limits. That's number 2. And there should be a link somewhere for income limits on their website. If it's not there, don't worry about it. We can go through that on the next segment here. I don't think they have the income limits right there, which is fine. But yeah, you do need to get qualified.
I'm sorry.
Okay, perfect. No, yeah. So let's look at LA County. You can't make more than 168,000. Let's go Riverside County. You can't make more than
combined household income, right?
Correct. So whoever's applying for the loan combined cannot make more than this a year. Let's look at Riverside County, 164. Let's look at Orange County. Orange County is a popular one. That's where I just funded mine. Elisa Viejo, 216,000.
Wow.
That's pretty good. LA County, let me see, San Bernardino, 164,000. That's good. Let's go Ventura County.
Somebody who makes $164,000 gross income, what are they going to qualify for as far as a loan, do you think?
Okay, so this is where it gets interesting because remember, they're putting down 20%. So you have to qualify for the 80%, right? So you have to qualify, and it's 45%. So let's look at, can you go where the rates are at? There should be let's pull out a mortgage calculator. Let's do the math here. So 168,000, right? What is that a month? That means you're making 14,000 a month combined. If you just Google CalHFA interest rates, they have a link of where all their interest rates are that day. And that's another thing too. CalHFA interest rates are what they are. No matter what bank you go to, that has to be the rate. So go down. There's a Dream for All rate. Dream for All rate is 6% right now.
Right. So
Okay.
even if a buyer is talking to a lender and they say, "Oh, I can get you a better rate for the Dream for All,"
There is
that's
no better
not
rate.
true because these are the rates. So they're
That's
not
exactly right.
fluctuate. These are the posted rates. These are the actual rates. And just remember, the lender that you are getting your loan approval from must be approved by CalHFA as well.
Exactly.
Can't go to any bank or any lender. It has to be a CalHFA approved lender.
So that's a good point. So let's say 168,000 a year divided by 12 is 14,000 for the year. Now they don't want all your debt to be more than 45% of that number. So that means your housing payment can be more than 6,300. So let's go to our mortgage calculator. So 6,300 is the magic number, assuming you have no other debt, no car payments, no credit cards, anything
Student
like
loans.
that. Student loans, none of that. So let's do this. So we're at 6% interest rate. I'm gonna plug that in. Down payment is 20%. Let's say HOA, a homeowner's insurance. Just for the sake of this video, I'll just do
400.
let's do 200 times 12, maybe 2,400 a year. Do you think that's a fair assessment? I know you think a little more.
But for this example, we could use that.
Okay, so we'll do 2,400. That's 200 a month. Taxes, you're looking at usually about 1.25%. So I'm going to do 1.25%. All right, so let me see how high can I go for a $6,800 payment. So you're at I would say 1.1, I would say gives you, because again, they're putting down 20%. So you're qualifying for a loan amount of what's 80% of 1.1. Let's do the math here. Times 0.8. You're qualifying for $880,000 loan at a 6%. And again, the insurance is pretty low on here. If you're going to go that high, I get that. But, and you're not paying any mortgage insurance because it's 20%. That's another thing. That's another benefit of this program is there's no mortgage insurance. It's just taxes and insurance, which taxes I have at $1,145. Your property insurance, $208. And then your principal and interest payment, $5,276. So again, you could qualify for in Los Angeles County $1.1 million house, assuming this is the great thing, assuming you have no debt. This is a benefit of not having any debt. Again, if you have any car payments, credit cards, things like that, this will affect your qualification. But hey, CalHAFA is giving you 20% down. Now, hold on one second. This is another thing these are another overlays. They're not going to, the max is 150,000. So let me make sure the 20% of 1.1 is 150,000. If not, we got to go down from there. Times 0.2. No, that's 220,000. So let's do this again. Now, again, there's so many overlays with this that you got to be careful. So let's do the math backwards. Divided by 0.2.
So this would be a good time to have your W-2 ready that you're going to get this year, the one that you received last year. Get your pay stubs in order. Have your latest bank statement ready because usually the banks want to see if you have any assets. Maybe you have a retirement account, 401k, so you can have your quarterly statement available for your retirement account.
So yeah, correction.
And credit pull.
20% of 150 is 750 purchase price. So there's a cap of 150 per person. So yeah, now you're looking at around 750 no matter what, because again, they're capping it at 150. Now, if you have more money to put down, you can increase that amount. Just CalHAFA is saying, look, we're going no more than 150,000 per person. Okay,
right.
So
there's only a select amount of people that are going to be able to receive the funds.
Exactly, which is why it makes sense why my client was only able to get a condo in Orange County. They wanted to stay in Orange County, so we were miraculously, because we have to also get a condo that fits Fannie Mae's guidelines when it comes to how much they have to get insured, so on and so forth. So that was another hurdle. And which is why my first CalHAFA was in San Bernardino, because they could find anything around there and not hit that 150 cap. So, there's a few caveats. A little bit
about Shannon. Let's say your buyer that you just closed a CalHAFA Dream for All loan, right? You just funded one of those.
Yeah.
So let's say the buyer let's say the rates come down to 4% next year. And the buyer decides to refinance. Don't they have to repay that money at that time, whether they refi or sell?
No, not necessarily. You can refinance your first loan, the 80% loan, one time just to lower the rate. Now, if you pull out any equity, you have to pay back that loan. On top of that, you have to give 20% of whatever equity was built over that period of time.
Right. So that's why it's called the shared appreciation loan.
Because you're sharing some appreciation with California.
That's right.
Right. So if you sell the house or if you cash out equity from this, you have to give them their 20%. So if you're smart, you would refinance, let's say after a year, because that equity is not going to be as much, right, to share. But here's the other thing that a lot of people don't think. You have to now qualify for that additional 20%. Right? So again, a lot of people, you're getting a house that you probably wouldn't have gotten otherwise, because again, you're qualifying for an 80% loan. Because a lot of times when people, first-time home buyers, you're doing FHA, which is 96.5% of the purchase price, or 95% if you're putting 5% down conventional. You're qualifying for 95%. In the CalHAFA program, which is why it's so special, is you're qualifying for more than you would, anyway, because what family member would give you 20% and say, just pay me back whenever you sell, right?
Right.
It's possible. And if you have an uncle or a parent that could do that, please, adopt me. But if you don't, this is a good opportunity. And guess what? It's not going to cost you anything. It's not going to cost you anything to put your name in the hat. And going back, Patricia, what you were saying, one of the steps is you have to get a pre-approval letter from an approved CAHAFA lender. That is one of the requirements to apply for this. You have to be qualified for the 80%. So you definitely have to talk to someone like myself, get all your documentation in now, so that way when the portal opens, you already have that pre-approval letter from your lender. You're going to need your ID. I think you're going to need your I think they ask you for your identification. They're going to ask you for your pay stubs. You have to fill out something attesting that you are a first-time home buyer, and you're going to need to put the names of your parents to make sure that they don't have a property as well. So,
there's a lot of details, but the important thing is that we're here to guide you through that process. So if there's something that stands out where you potentially wouldn't qualify, we would notify you and let you know and bring that to your attention. So you're not wasting your time. We want to put you on the path to success. And Shannon, you've provided a lot of details today about the program. There's always more updates that have come out. I know the last time they launched the program, there were updates that followed. So stay in touch with us so that we can provide you with that information. And if there's something substantial that's changing in the program, then we'll do another video on that as well.
Yeah. So again, talk to us. We'll guide you through the process, because as you see, even me going through this, there are so many different guidelines that we have to go through. And mind you, this loan is tedious. When my client signed, he signed almost 200 and something documents. Wow. Right. This loan is again, there's a lot, because again, you need to qualify for the bank. That's, so, providing the 80%, and then you need to follow CAHAFA's guidelines. So you're pretty much essentially qualifying for you are qualifying for two loans, because when you're doing this process, we have to send you two loan estimates to sign, one for the bank and then the other one for CAHAFA. So you're essentially assigning two loans. So a lot of people say, oh, this is great, but nothing's free. You're not paying money, but you are paying for it in all the paperwork you're going to have to fill out and everything you're going to have to give to me. So again, I apologize up front, but again, hey, you want the 20%, it's there for you if you're willing to put in the work.
Right. And it's just a matter of having all your documents together and sending them in as soon as possible. Then we'll have to help you through that process.
Exactly.
So any other updates? I think we've covered a lot today. Looks like we're ready to wrap it up. What's going on with you, Bill?
Just to put a fine point on what you guys just covered, I would say it's not about whether the CalHAFA loan is the best loan. It's whether it's the best loan for you and how to make it work for you. And so that's why it's important. Shannon went through those details today, and Patricia's experience with it. But reach out to one of them and make sure, if you're looking to buy, this might be a tool to help you get over the hump and save you the money that you need to get in the property. So that's kind of my 2 cents on that. Otherwise, market's good. I've got offers coming in on properties, putting stuff into escrow. I'd say with the lower rates, we have a little more inventory as well. This is a really good time to buy. We've been saying that for a while because it is. It's certainly better time to buy than it was a year ago, in that housing prices seem stable, yet rates are lower, which means your costs are lower and the house is worth more. So if we can help you get that done, let's get together. So we'll wrap up. Shannon, any last words, or how should somebody get a hold of you?
Yeah, you can reach out to me, my Instagram, FUND Fun with Shannon. I'm going to be actually putting out more content on the CalHAFA Dream for All the next month or so. My phone number is 661-317-8484. Or you can catch me on the First Time Homebuyer Seminar show with Bill and Patricia live.
Patricia, what's up with you, and how should somebody get a hold of you?
So just remember, when the interest rates start to drop even more, let's say they drop another percentage, every percentage that the interest rates go down, you're looking at 3 to 5 million more buyers entering the market, which means more competition for you as a buyer. So let's connect. I can be reached at 323-365-9909.
Fantastic. I'm Bill Gross, Apple Gross Probate and Social Media. We do this every week. New episode hits the books on Friday. Love to get your feedback, comments, complaints, issues, suggestions. If we can help in any way, please reach out. And as always, make today your best day ever. Thank you so much.
Thank you.